Realty Income, known as the monthly paying dividend stock, got its start in 1969 with a single investment in a Taco Bell, believe it or not. And now, as far as today goes, the massive REIT owns thousands of properties across America, leasing to tenants operating in various industries. Also quite impressive, the most popular REIT, Realty Income, has paid uninterrupted dividends since the firm's founding and has only increased its dividends every single year since going public in 1994. Making Realty Income without a doubt a dividend aristocrat. But with Realty Income trading basically at its 52-week low currently, some investors are both concerned and excited seeing problems ahead or potentially a long-term buying opportunity. Now in this video, we are going to dig into Realty Income's current performance and also going over some of the struggles ahead because, believe it or not, there are some risks ahead. Then later, I'm going to share my personal thoughts on Realty Income and exactly why I have been personally buying hundreds and hundreds of more shares of Realty Income over the last few weeks. And before we get started, make sure to please drop a like down below and subscribe for more future content like this. So first, digging a little bit deeper into Realty Income's performance on multiple different time frames. On the last year, Realty Income's down around 18.3%, year to date down around 13.5%. The 52-week range for Realty Income is 54.76 and 68.85 as the high. Now, Realty Income in 2020, when everything flash crashed, Realty Income was trading momentarily at $42.22 per share. So of course, just psychologically, that's sort of the low that I'm waiting for Realty Income to either hit. And honestly, I don't think there's a chance that Realty Income is going to surpass the 2020 lows. Although to be real here, anything is of course possible. But on the max time frame, Realty Income's up around 593+%. The share price has been doing pretty well. Although if we want to be real here for a second, Realty Income on the last 5 years is now negative. Down almost 2%, of course, just as far as share price, not total return, not including the dividends. But just as far as share price, this stock is down 2% over the last 5 years, which definitely hurts. Now, without a doubt, one of the main reasons on why Realty Income is trading the way it is because of interest rates and the fact that the Federal Reserve has interest rates at around 5.5%. Now, of course, it doesn't take a genius to figure out that the more expensive it is to borrow money, the less profit real estate investment trusts are most likely going to make because a lot of their real estate is purchased with debt. And speaking of Realty Income and purchases, Realty Income did just recently invest $950 million in the Bellagio, Las Vegas, and this is in an agreement with Blackstone real estate investing firm, where Realty Income added about $950 million to the investment, valuing the asset at around $5 billion. Now, it also says that Realty Income would invest around $300 million of common equity in the joint venture, subject to certain adjustments, to acquire a near 22% indirect interest in the property. Realty Income would also invest $650 million to buy a yield-bearing preferred equity interest in the joint venture. Now, some Realty Income investors weren't necessarily thrilled about this joint venture, and the stock price definitely reflected that. Now, back to the interest rates monitoring tool, another risk ahead for Realty Income potentially is the fact that some of their debt is going to mature over the next few years here. Now, looking at the United States Fed fund rates over time, back basically since 2008, real estate investment trusts, just like Realty Income, were basically able to borrow money and use debt at almost a 0% or 2% interest rate for a span of many, many years. Now, of course, interest rates being at nearly 6% currently, and being unsure with where interest rates are going to fall, say next year or the year after that, real estate investment trusts that do have debt maturing are going to have to go back into the debt market, raise some money, and they are going to be paying an arm and a leg compared to what they're paying over the last decade or so. Now, something that I'm personally very bullish on when it comes to Realty Income is their overall portfolio and how diversified it is. On their website, it says Diversified Delivers. We focus on acquiring and managing high-quality single-unit freestanding commercial properties under long-term net lease agreements leased to leading global operators. By curating an extensive and highly diversified portfolio, our business generates reliable revenues and supports our increasing monthly dividends and strategic growth initiatives. Currently, our portfolio includes around 13,100 commercial properties that are leased to over 1,300 different clients who operate in more than 85 separate industries throughout all 50 states, as well as Puerto Rico. Now, this is exactly why I personally think that Realty Income is going to thrive over the next 10 plus years. Their top 10 industries being things like convenience stores, grocery stores, dollar stores, home improvement stores, drug stores, restaurants, health and fitness, automotive, general merchandise. These are the type of commercial real estate that I personally would love to have exposure to. Also very important, Realty Income has a majority of their exposure in retail, which is once again one of my favorite, and maybe you're curious on what my least favorite property type is, and as of right now, it would honestly be office buildings. Also, looking at Realty Income's portfolio occupancy since 1992, their portfolio has been anywhere from 99% to maybe 97% full over the last 30 or so years. Now looking a little bit deeper into Realty Income's current dividend yield, it's offering at 5.56% forward dividend. With, of course, a lot of dividend growth and a monthly frequency that's been paying dividends on time for many more years than I've even been alive. But to be fair, to play devil's advocate on Realty Income's 5.5% dividend yield that it's currently offering, right now you can borrow money to the US Treasury and earn around 5.4% yield for literally no risk at all. No risk of losing your underlying, just getting paid a nice juicy 5.5% yield. So that's also one of the reasons on why I think Realty Income has been selling off so much as of recently, and why some more REIT-focused investors that would normally be super excited about a 5.5% cap rate or dividend yield are not necessarily as excited about that anymore, considering they can just buy short-term bonds and make basically the same exact amount of money. Now, the CFO recently also said, "I am pleased with the results our team delivered in the second quarter," said Summit Roy, Realty Income's president and chief executive officer. "Our performance continues to be driven by our diverse and high-quality portfolio of leading clients. Our global pipeline of investment opportunities with favorable risk-adjusted return profiles remain active. During the quarter, we closed $3.1 billion of investment volume, and we continue to elevate and expand into new geographies. Our investment efforts are supported by our well-capitalized balance sheet, which was further bolstered through a successful debt debut Euro bond offering in July. In addition, we currently expect over $650 million of net proceeds from unsettled forward sales of our common stock to support our near-term growth initiatives. Given our current liquidity position and healthy investment pipeline, we are increasing our acquisition guidance to over $7 billion. Also very important, combined with our well-performing real estate portfolio, we finished the quarter with a 99% occupancy rate, and our business remains positioned to offer investors consistent cash flows and compelling risk-adjusted returns." Now, another thing that might be sort of concerning is the amount of shares outstanding that Realty Income has currently. Over the last few years, Realty Income has been playing on the offense, and by doing so, they've been raising a lot of cash and offering a lot more shares, potentially even diluting the shares that we currently own. Now, the final concern that I have when it comes to Realty Income is the fact that this company is already so big and gigantic. I mean, they currently own over 12,000 different assets. And the question will be, is this REIT a little bit too big for its own good now? Meaning that, will there not necessarily be as much growth potential as investors would have seen maybe 5, 10, 15, 20 years ago? For example, looking at something like VICI Properties, which I also hold in my portfolio, this is a much more newer REIT that I'm not necessarily saying is better or worse than Realty Income, but I do think because this REIT size and because of how long it's been around, it might potentially have a lot more growth potential, at least maybe in the short term, than that of something like Realty Income. So even through all the good and bad, I personally have still been buying hundreds of shares of Realty Income over the last few weeks here, bringing my total share count somewhere around 23, 24, 2,500 shares across all my different dividend portfolios. Now, my current cost basis across the board with Realty Income is around $58, $59 per share. So I am down a little bit of paper money if you look at it that way, but I also have been earning dividends from Realty Income for years now, and I also sell covered calls on Realty Income and have also been doing so for years. So with my yield on cost of around 5%, dividend yield that I'm currently earning with Realty Income, and all the premium that I'm earning from selling covered calls, I'm comfortably earning around a 7 to 10% annual return from Realty Income without even having to sell my shares. But that being said, I want to hear what you guys think down below when it comes to Realty Income. Comment down below the most bullish or bearish thing that sticks out to you right now when it comes to this REIT. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.